So good to see you again, Michael. Really, really lovely to see you. I was wondering if you tell me, are you guys getting involved in any crypto blockchain projects in your investments?
Yeah, absolutely. I mean, I think the space is really interesting, and you kind of have to look at it in two ways, at least from our perspective. There's equity investments into blockchain-based businesses, and then there's investing directly in tokens into protocols to help fund the development of those open source protocols. For us, we're more focused on the equity investment side, in part, I think, because we really believe that the infrastructure layer is really interesting when it comes to building out, particularly for the capital market side of this whole crypto capital market structure, the ability to create trading venues, exchanges, custody solutions, et cetera. So I think when we think about this space, we definitely interested in tokens and what that means for VC. And you've seen an advent of crypto funds as a result of that. But for us, when we think about this space, it's really how will blockchain technology impact traditional financial market structure? So how will it impact the way traditional banks like Goldman Sachs or JP Morgan, do things like settle securities, trade, et cetera. And then crypto capital markets. So the ability to trade tokens, how will that be impacted, and what companies can you build to help create the infrastructure layer for that?
It's so exciting, isn't it? It's like being in the middle of a revolution or something. I was wondering, obviously with the focus tonight on the panel, is how do you think the ICO funding is affecting venture capital? And obviously this is the heart of venture capital here in Silicon Valley. So it seems like I've heard a few VCs have told me that people are changing the structure of their fund to accept tokens. What's your perspective on that?
Yeah, I mean, I think it's definitely
Sea change.
it is a sea change, and I think it's you kind of have to look at both sides of it, right? There's some good things, and there's some things that have not been so good when it's come to what ICOs have meant, particularly for end investors. So, start out with some of the good things. I mean, it's a great way to fund technology development. It incentivizes developers and really puts the capital in the hands of them as opposed to in the hands of investors, which can be certainly a good thing.
Yes.
When it comes to actually building these projects.
Yes.
So there's been some very good things about democratization. I think on the other side, though, you have investors who've invested in these tokens and may not have any idea why they've invested or what they've invested in, and that hasn't been so good. So I think what you're seeing, particularly with regulations, the SEC coming out and saying, in many respects, that Jake Layton said pretty much every ICO I've seen looks like a security, and now you can potentially debate the merits of that. But if you take that line, which given that they're the regulators, is probably a good line to take, that what they're trying to get at is investor protection, which is good. And then I think the other piece of all this is that, does this mean that venture capital will go away? I don't think so. Maybe it will change a little bit and have to adapt. Certainly some VCs are changing their limited partnership agreements and investing so they can invest directly in tokens because they're able to capture some of the upside of tokens and these liquid securities effectively. But you still, I think venture capitalists will still exist because you need some sort of ability to help companies or even protocols and teams build out their idea, understand their market, and I think VCs in certain cases can provide a lot of value there. And then the other piece of this too is, at the end of the day, particularly in these early stage projects, whether they're companies or protocols, you need to have a VC mindset, right? It's still a very similar skill set, and that's a specialized skill set of understanding, how do you evaluate team? How do you evaluate market? How do you evaluate technology? That may change a little bit when you get into the whole token world. You'll have to understand liquidity. It's a slightly different skill set than understanding, traditional company building, but there's still a lot of similarities when it comes to VC, so I don't think it'll go away anytime soon.
So someone was telling me that a lot of VCs were investing in tokens, but they were just throwing their money at it and at them, and not actually contributing and not having to work, I guess. And I thought that was a very sad thing in a way, because that's what I value of all my VC network, is their wisdom and experience. I mean, who else has sat on so many board tables? Who's seen all those companies that have failed and the ones that succeeded? Well, the VCs. And I think that, for our ecosystem, they're very valuable in that respect. Not about the money, more about their wisdom, really. So I thought that was a sad point. Do you have any comments?
Yeah, I do. So I guess there's a few a few responses to that. One is I agree with you. I think VCs can be very value additive. Obviously there are cases where they're not, but
Yes.
but in some cases that definitely can be. I think the first question people have to ask is, what's the point of doing an ICO instead of raising money to build a company and raising equity? Number one, I think, obviously if you're developing an open source protocol, doing that in a way, where you don't need equity funding can be good for the founders of that protocol, and it incentivizes the right people. You're putting money in the hands of the stakeholders, and those stakeholders end up becoming evangelists. So that's not necessarily a bad thing. You're also incentivizing developers to work on that protocol. However, I think when it comes to the ICO world, some of these founders should ask themselves, do they really not want any governance? Do they not want any equity ownership? And in some cases, the answer is yes, but then you also have to ask yourself, well, is this a business model that needs a token and that should be decentralized? Because if the answer is no and you're doing a token for the sake of doing a token, then there's no reason to do it. And that kind of goes back to the side of, well, maybe, working with VCs, building a company can be a good thing.
I know I found out at the end of last year when all that buzz was happening that a lot of companies were raising ICOs and weren't blockchain companies. And I was like, oh, really?
Yeah.
Why?
Yeah, I mean, it's interesting. It can be a way to raise capital very quickly. The other piece of this, too, is sometimes more money is not always better. So raising hundreds of millions of dollars isn't necessarily healthy for the development of a project.
Yeah.
In some cases it can be, but in many cases not.
Yeah.
So sometimes being capital constrained can be a good thing. So that I think would be the side of the argument of, does it make sense, to go the way of venture capital funding as opposed to raising money for an ICO? What I do think will happen is you'll start to see some sort of a blending of both skill sets. So VCs needing to understand how to invest directly in tokens and have the skill set of managing liquidity, because there's absolutely a ton of upside to be created in these protocols.
Right.
There could be massive amounts of value created in these protocols, and VCs shouldn't want to miss out on that.
Yeah.
But at the same time, there's also a lot of blockchain-based companies that may not need to be funded through an ICO that should have traditional equity, and that's where VCs can play a role. I think what you're also seeing too, another interesting market development is, you're seeing some of these protocols, they have a company where they raise equity to fund the company and pay the team, et cetera, and then they raise an ICO later. So you're almost seeing some sort of hybrid structure between VCs playing a role early on, helping form and shape the business idea, the team, the protocol, et cetera, and then the protocol doing an ICO and a token sale to attract evangelists, attract users, which that I think can be an interesting kind of permutation of both venture capital and ICOs, because it's definitely something that's changing the industry. You have to think twice about it if you're a VC. You also have to think about what the implications of crypto funds mean on traditional venture capital funds, because from the LP perspective, I think that's the other piece of this too, is, what is an LP going to think about when they can, they could invest in a crypto fund where they can generate multiples of their capital in a year and have it be liquid, as opposed to have to wait 10 years to generate, 2, 3, 4x with a venture capital firm.
Yeah.
That's an interesting question for LPs. Again, the crypto fund space is just starting to take shape. It's just starting to mature. You have a lot of first-time fund managers who've never managed assets before, so that looks a little different than the VC community, where many of those venture capitalists have managed money before and they have a track record of doing so for institutional limited partners. But I think that's something that VCs also have to think about, is how does the crypto fund model, kind of impact their business model?
Very interesting. And do you think there'll be the LPs will hold back from investing in venture as a result of the fact that the crypto funds will give such good returns?
I think the answer is depends on what LPs you're talking to. So I think it'll be a little while before institutional LPs come into the crypto fund space and allocate to crypto funds. They're certainly interested, they're certainly talking to crypto funds, but there have to be structures in place. A lot of these funds have to get registered as RIAs, registered with the SEC. There has to be a third-party custody solution, which things like that are being built, Coinbase custody, Kingdom Trust and BitGo, Anchor Labs, things like that, custody solutions, which are being created so that these funds can have third-party hold their tokens. But I do think certainly in the micro VC space, so sub $100 million VC funds, you're already starting to see a pullback in how much LPs, particularly family office LPs, are allocating to micro VCs, because a lot of them made their bets in the last 2-3 years. So they're waiting for that to harvest, and they're not making as many micro VC bets. So it'll be interesting to see if family offices start to shift towards investing in crypto funds, where they can get potentially similar return profile if they invest in top managers, top crypto managers, that is, crypto fund managers, that is, but don't have to deal with the illiquidity issues.
Very interesting. Thank you so much for that education, Michael. And I'm really looking forward to this panel. I think it'll be very interesting.
Yeah, thank you. Me too.